Qantas announces a massive profit but is forced to defend airfares and its performance. The federal budget is set for 40 years of deficits, and the first US presidential debate takes place without Donald Trump, but he's still got all the headlines. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Friday, the 25th of August, 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you are speaking today with Joseph Lyons and Louise Southall from Xero.
Yeah, so it's a great chat all about the state of the small business sector. XeroCon's at the moment. Very big conference, which has many of attendees looking at that small and medium-sized business sector. Xero has some great research out about it. Louise is an economist, so she gives us that take. Joe runs the Australia-New Zealand operation, so he has a great understanding of the pain small businesses are feeling at the moment, also where they see opportunities, and that's what we talk about.
Yeah, Xero is a very good supporter of Fear and Greed. It's a really good interview. It's coming up a little bit later on. The main story this morning, Sean, it's all about Qantas. It yesterday announced a record annual profit of $2.5 billion, which is great for shareholders, but the bumper profit has frustrated critics who claim airfares are too high and the carrier's performance just isn't up to scratch.
Yes, so let's start with the shareholders. They're happy, and the national carrier share price rose 1% yesterday. A surge in demand and higher airfares underpinned the massive result, and Qantas said it has enough cash to buy back about $500 million worth of its shares. There was a jump in profit margins across the business, and particularly in the domestic arena. In domestic flights, it now makes more money than it did pre-COVID. Given where it was a few years ago, Qantas's balance sheet is strong, and net debt is falling. Chief Executive Alan Joyce said the performance shows a substantial turnaround in service. He said, and I quote, "We've shifted from heavy losses to a strong profit and pipeline of investment worth billions of dollars," end quote. Now, that pipeline includes 12 Boeing 787 Dreamliners and 12 Airbus A350s to replace older planes in the fleet. So, as I said, shareholders were pretty happy.
Plenty of new planes, Sean. Great news. But what about the critics?
Well, cancellations and delays remain above pre-pandemic levels, so too do airfares, and customers aren't happy. The competition watchdog previously said Qantas was the most complained about Australian company for the past 2 financial years. And next week, boss Alan Joyce will front a parliamentary committee into the cost of living. There's also legal action hanging over the airline around use of flight credits. Yesterday, Qantas said domestic flight levels were back above pre-COVID capacity, but international flights won't achieve that until early next year.
So, Sean, when you look at it all, it's a pretty good result, right?
Yes, it was. Last time Qantas announced a normal result, shall we say, pre-COVID, was the 2019 financial year. It made $1.3 billion. It's nearly double that this year. Like him or loathe him, Alan Joyce has used COVID to restructure the airline with a much lower and more flexible cost base. That is very good news, at least for shareholders. The trick is to keep up shareholder returns without upsetting customers, workers and unions, and of course governments. Incoming Chief Executive Vanessa Hudson has a very tricky and narrow path to follow.
I was looking at some pictures yesterday, Sean, of Alan Joyce and Vanessa Hudson. I was thinking, obviously, the succession planning at Qantas has been very good over a long period of time to ensure that she was there and ready to take over the role. And it's been quite a long handover period, a transition between the two. But goodness me, you would be feeling the pressure, wouldn't you? Just kind of just gradually getting a little bit heavier every day, just knowing that very soon you're stepping into this.
I don't envy the CEOs of big companies, particularly iconic ones like Qantas. I think it's a very, very hard gig.
Yeah, they certainly attract plenty of attention. How did local markets perform yesterday?
Not too bad. The S&P ASX 200 closed up 0.5% yesterday to 7,182 points, with WiseTech Global, which was absolutely hammered on Wednesday, performing best, jumping more than 8%. There were some pretty good performers all around, though. All the banks were higher, with Commonwealth Bank, National Australia Bank and Westpac rising more than 1%. The energy stocks Woodside and Santos outperformed. Macquarie Group and Newcrest Mining were both up around 1.8%. REA Group jumped 2.4%. While Xero finished 3.5% stronger. The underperformers were the big supermarket chains, Coles and Woolies, while Telstra also did poorly.
So many stories around, Sean. Plenty of profit results.
Let me just go through some of the main ones. Australia's biggest health insurer, Medibank, has axed bonuses for its executive leadership team as a consequence of last year's cyber attack that involved Russian hackers stealing and publishing sensitive health information of about 9 million customers. Medibank yesterday posted a 30% jump in annual profit, said it has now a record number of policyholders. That suggests that cyber hack didn't actually hurt the bottom line too much. Whitehaven Coal has suspended its share buyback program, which analysts believe is a nod to the group's desire to buy BHP's coking coal mines. The coal company reported a $2.7 billion profit for the last financial year. Not bad. Mind you, Whitehaven's share price closed down 5% yesterday. TPG Telecom, its profit tumbled 71%, and the group needs to cut costs. It says plans to cut some of its brands. It operates names including Vodafone, iiNet, AAPT, Internode and Felix. You would imagine some of those will go. Australia's largest listed residential property developer, Stockland, will push into more affordable housing as it seeks to ride a recovery after a tough year. Mind you, it was still able to lift its funds from operations. Another interesting one was agribusiness Costa. It was among the worst performing the top 200 yesterday, down 11%, after the company said it is uncertain, not a good word, uncertain if the $1.6 billion purchase by New York private equity firm Payne Schwartz Partners will go ahead.
Wow. Sean, rapid fire Aylmer, just powering through the results today. What's happening in international markets?
Well, oil was off on the back of weaker than expected private activity sector data out of the US. Gold's trading around $1,920 an ounce. Iron ore prices continue to climb. Gas prices were off a bit. And now that I'm back home, not going to the US, the Aussie dollar is up a bit, trading just under 65 US cents.
Timing is everything, isn't it?
Sure is.
All right, we'll be back in a moment with the rest of the day's business news. Sean, the federal budget is expected to be in deficit for most of the next 40 years as the ageing population puts pressure on spending, the tax base erodes, and climate change costs the economy. That's really the verdict from the government's intergenerational report that was released yesterday.
Sure is. Now, look, I'm looking forward to speaking to Stephen Koukoulas next Monday, our resident economist. So I reckon he would have spent the whole weekend reading this report, one of the few people that would. I can't say I've read it all. However, I get the gist of it. And certainly Treasurer Jim Chalmers was out spruiking it yesterday. He said the report shows that the government needs to show the same policy vision as the Hawke-Keating government of the 1980s, and the 2020s could be a defining decade for the country. Mind you, he then went on to rule out wholesale tax reform. So that sort of undermines the big vision part, I've got to say. Basically, the report provides 8 reform priorities: budget discipline, transforming to a net zero economy, developing a better trained workforce, deepening the industrial base, lifting investment, greater efficiency in markets, and reforming institutions like the Reserve Bank and the Productivity Commission. Plenty of detail for all those wonks out there interested in what's going to happen over the next 40 years.
It's a fairly chunky document.
Yeah.
Sean, I just having a bit of a flick through. It's 296 pages long.
Yeah. That's more than a weekend's reading for me.
Yeah, me too. That's about 6 months. The speaking of Jim Chalmers, yesterday he also flagged superannuation reforms.
Yes, more accurately, he wants to shape some policy development, what a euphemism, around retirement income products, particularly around the retirement phase of super. He says it's important to put more attention into the retirement phase at post-65 or post-67 years of age, rather than just the accumulation phase. Essentially, he wants retirees to spend more of their money rather than leaving it to the kids. And Michael, I totally agree.
It's what it's there for, isn't it?
Totally. I hope my mother doesn't leave me anything, and I have no intention of leaving my kids too much.
Do they listen to the podcast? Surprise, kids.
Yeah.
Sean, Woodside and unions have confirmed they've reached an in-principle agreement over the company's Northwest Shelf LNG platforms, averting strike action that could well have disrupted global gas supply.
This has been bubbling along for a few days and has really pushed the price of gas higher. The Offshore Alliance, a collaboration of the Australian Workers' Union and Maritime Union of Australia, released a statement yesterday saying that an agreement had been reached in principle after 15 hours of negotiation. An Offshore Alliance spokesperson said it was positive that the parties had agreed without the need for protected industrial action. He said if members endorsed the outcome, it would leave Chevron as the sole operator in the West Australian gas fields without an enterprise agreement with its workforce. The bottom line to this is global gas markets are relieved that an agreement is almost in place.
Australia's largest car dealership group, Eagers Automotive, has announced a 12% jump in underlying profit and says it has a 22-month backlog of orders still to be delivered to customers. That is substantial.
That's not bad, is it?
Wow.
So Eagers operates 200 showrooms. It sells brands from Toyota, Ford, Volkswagen, Honda, BMW, Subaru. It's also increasingly in the Chinese electric vehicle brand BYD. Now, Chief Executive Keith Thornton said the company's in a strong position with vehicle buyers paying full price for cars, little discounting around at the moment. He said about 10% of all vehicle deliveries for the first 6 months of the year were electric vehicles, and buyers are now seeking out more affordable options. Hence, BYD is doing pretty well. The result was so good, the group said it will pay out a record first half dividend.
Ramsay Health Care said the post-pandemic recovery in earnings from its hospitals and day surgeries would take longer than expected. And while net profit was as expected, the group slashed the dividend in half, Sean.
Yeah, so that, along with a downbeat earnings guidance, was enough to push Ramsay's share price 12% lower yesterday, the worst of the top 200. Now, Ramsay operates 74 hospitals, clinics and day surgery units in Australia, 14 psychology practices, hospital in the home services, telehealth, allied health clinics, and a retail pharmacy franchise network of more than 60 community pharmacies and 40 in-hospital dispensaries, very much part of the ecosystem. It also owns Ramsay Santé, Europe's largest private care provider. Now, remember last year, private equity group KKR made a $20 billion bid for the company. Ultimately, they dropped the offer. Ramsay has really struggled to return to the earnings of pre-COVID levels. The group's now valued at $11 billion. That's a long way under the $20 billion bid that was originally made by KKR.
Yeah, long way. Now, a big day yesterday, Sean, for media companies. Nine Entertainment announced a drop in revenue, profits and dividends.
The free-to-air TV business suffered from a drop in revenue and higher costs. The highlight in the result was Stan, where it was able to maintain its 2.6 million subscribers and boost margins through higher pricing. Revenue in Nine's publishing business fell 3%, and Chief Executive Officer Mike Sneesby said the market this year was looking subdued, especially in television, digital display and print publishing ads. The media group's share price closed up 1.5% yesterday.
One more, Sean. Diversified miner South32 announced a $173 million net loss following a big write-down on the value of its Hermosa base metals project.
South32's underlying earnings tumbled 65% to $916 million, down from $2.6 billion last year. Now it pushed its share price 2.4% lower yesterday. South32 boosted production in many areas, like aluminium was up 14%, base metals 17%, manganese 4%. But earnings took a big hit because commodity prices in many markets fell from the near record levels of the previous financial year. Boss Graham Kerr said cost increases in terms of labour are much more pronounced in Australia than other jurisdictions. He also talked about the Albanese government's industrial relations changes, warning that the same job, same pay policy was bad for productivity.
All right, turning to international news now, and mercenary leader Yevgeny Prigozhin, who led a brief armed rebellion in Russia earlier this year, was on the passenger list of a private jet that crashed yesterday morning north of Moscow.
Incredible story, something you see in the movies. You don't think it happens in real life, but there you go. Prigozhin's key allies were also on the plane. The bodies of all 10 passengers and crew members on board have been found. Who's to blame? Well, British security sources are being quoted as saying it was the work of the FSB intelligence agency on the orders of Russian President Vladimir Putin. Supporters of Prigozhin said the death was a result of the actions of Russian traitors. US President Joe Biden, well, he just said he wasn't surprised that Prigozhin was dead.
I mentioned this next one at the top of the show, Sean. The first 2024 Republican presidential debate yesterday pitted 8 of the 9 candidates against each other. One was missing. Donald Trump.
He decided to opt out of the debate and do an interview with conservative commentator and former Fox News broadcaster Tucker Carlson. Yesterday's debate, the first in a series which is designed to demonstrate the credentials of those hoping for the Republican nomination to take on, Joe Biden, presumably Joe Biden next year, included former Vice President Mike Pence and Florida Governor Ron DeSantis. Analysts said there was no real winner. There was a lot of talk about Donald Trump. The climate change denier Vivek Ramaswamy seemed to come in for most criticism. For his part, Trump said he didn't want to be at the debate where he'd be harassed by people who shouldn't even be running for president. I think some of those at the debate thought the same thing.
Finally, Sean, current Wall Street darling Nvidia says the artificial intelligence boom will last well into next year, and it's so confident that it will buy back around $25 billion worth of stock at the group's current near record share price level.
So if a company's buying back its shares, you want it to do so not when the price is at a peak. You want to do it when it's undervalued. So Nvidia is showing how confident it is in the AI revolution and its part in it by announcing this massive buyback. Nvidia, which has a near monopoly on the computing systems used to power services such as ChatGPT and OpenAI's generative AI chatbot, plans to ramp up production next year. Boss Jensen Huang told Reuters the two things driving demand are a switch from traditional data centers that were built around central processors to one built around NVIDIA's chips, and the rising use of content generated by AI systems in everything from legal contracts to marketing materials.
Nvidia is a strange name, isn't it, Sean?
It's taken so long for you to actually come up with that.
No, I was just...
Crazy spelling and all that.
Yeah, it doesn't make any sense, the spelling of it. So I've just been Googling while you were talking, just to see what the origin of it was. And apparently
yes. Is that next version or something?
Yeah, exactly. And the co-founders named all their files NV as in next version. Then they put it together with the Latin word for envy, Nvidia, and came up with Nvidia.
Ah, there you go.
You know what? It's just a point of interest. I just thought I'd put it out there as if there wasn't enough points of interest from everything else you've said. I'm just adding a little of Thompson gem in there at the end.
A TG.
Yeah.
Excellent.
That's right. Up next is the Fear and Greed Daily interview. You're speaking with Joseph Lyons and Louise Southall from Xero.
Yep, all about what's happening in the small business market. We've had XeroCon this week, which has been very well attended and very well appreciated. We talked to them about that and the findings from Xero about what's happening in that market.
Yeah, Xero, good supporters of Fear and Greed. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 25th of August, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, X, and Facebook. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.